when you use other people's money, your 280 grand stays in your bank. You have other people who are bringing the 280 grand to the table and they get a small percentage of the pie. Now, in my straight frame of thought, I'm completely fine with that. Why? Because this is the same formula that is used by people all across the sun. They understand the art of leveraging other people's money to help them acquire assets. So the basis of this is you're buying one particular asset that is called a syndication.
Welcome to the Contrarian Capitalist Podcast, the ultimate destination for accredited investors and entrepreneurs seeking alternative wealth building strategies. Discover how to fast-track your journey to wealth and time freedom by thinking outside the box. If you're ready to join the ranks of the Contrarian Capitalists and learn the most effective ways to reach your financial goals faster, you're in the right place. Let's get started with today's episode of the Contrarian Capitalist Podcast.
Welcome to another episode of the Contrarian Capitalist Podcast. I'm your host, Sylvania Harrod, and I like to refer to myself as your favorite silverback because I happen to be a 90s wrestling fan, and I just realized you can call yourself whatever you want to. So on today's episode, I'm going to teach you about one of my favorite acronyms, which is called OPM. That stands for Other People's Money. So what does that mean, and how does that work in the world? I'm giving you two lines of thought. So I didn't realize the value of OPM until I got into the world of private equity. Now, in this world, what I realize is that there's an art and there's a science behind utilizing OPM. And so let's just look at a base asset of real estate, right? There's in the world of real estate, there's what's called retail money, which is you walk to a bank, you get a conventional loan, and you buy it. You do long-term financing over 30 years, 40 years, depending on the terms. And that's it. That's kind of regular, what we're taught in a traditional manner. In the world of alternatives, there is a whole different world called private lending, which is also known as hard money or other elements to be able there. There's so many different tiers. You have private credit, you got private money. There's all kinds of things you can be able to do. You can grab funds, et cetera, et cetera. Now, in that world of like buying a real estate asset, let's just say I wanted to go and buy $1 million home just for simple math. I found a great Airbnb down on the beaches of Florida. It's off-putting a certain amount of cash that's going to cover what's called a debt service. And it's $1 million. Now there's a couple options. You can go through the process. If I went and got a conventional loan, I'm going to take 250 grand of my own money, because they're going to want 25% down plus closing costs, say 3%. So in that element, I am at 280 grand in order to buy that asset out of pocket. Now, you can go do that process because what you are doing in that element is you are using other people's money. You are using the bank's money as leverage to a point to be able to be there. Now, the problem typically with real estate is there's different levels of offsets of what you need in order to make your money back. So that situation, let's say the coverage is roughly $1,000 a month. It's going to take you 280 months. It's 280 months before you get to a place of actually being at cost zero. Now, in long-term assets, that can be fine depending on what you're looking for and be able to be there. But there's another way you can do it. You can utilize and you can find other people to join in on that deal with you. And what ends up happening is you can be able to cover that, let's just say it was 280 grand down for a percentage of equity on the deal. So when you use other people's money, now that your 280 grand stays in your bank. You have other people who are bringing the 280 grand to the table and they get a small percentage of the pie. Now, in my frame of thought, I'm completely fine with that. Why? Because this is the same formula that is used by people all across the sun. They understand the art of leveraging other people's money to help them acquire assets. So the basis of this is you hear it, if you're buying one particular asset, that is called a syndication. So a syndication is based upon like, hey, I'm buying one asset, I'm pooling together a group of investors in order to make that happen. Perfect. That's one particular asset. If you were to buy multiple assets, you have what's called a fund. I can dig into greater details if people want to know, but a fund is the gateway to the ultimate level of wealth you can ever imagine in your life. Funds are the basis of when you hear private equity firm, they're really driven by funds. You may have heard of different terms of funds. Hedge funds is one, venture capital fund, pension funds, endowment funds. A fund is a way to design a security to be able to ensure that it's regulated by the SEC and that only a certain tier of people are able to get access to them, a la an accredited investor. Now you can build other ones, but we're just going to leave that one alone. So that same example is the same thing you can do, just change the numbers. Let's say, for example, you were raising a fund. So you needed to raise $100 million. Now you may go to a bank or a different thing and they say, hey, we'll loan you $100 million, but you have to bring 20% to the table and show that that's stable. So what you would go do is you would go out and you would raise, you can use your own money. You have 20 million, you can just put it right in there, slide a check, and boom, good to go. But now your 20 mil is locked up. You have no liquidity. Or you can go and raise 20 mil using OPM. Use other people's money, and they're able to partake in part of the journey. Why is this wonderful? Because what you're doing is you're giving other people access. Like Zig Ziglar said it perfect. I'd much rather earn 1% of 100 people's efforts than 100% of my own efforts. So in this world, when we're looking at it, we want to use OPM. We can go ahead and park our money in very stable, liquidable investments, because you can pull it out quickly. You can be able to use it. Cash is king. You see opportunity, boom, you have access to cash. It's not tied up in something else that you can't get out of. And you let other people partake in the journey. So they're going to take 20%, and they're either going to want to do it based upon debt terms or equity terms. Either the equity terms are able to win. So let's just say I raised $100 million. We're going to buy this asset in 3 years or 5 years after it's done. We're going to sell the asset because the asset we bought was distressed. We added some love to it, and boom. Now we can turn around and sell the asset for $200 million. We pay off our debt service, which will be $100 million that we originally spent. Now there's a $100 million pot. If that $20 million was raised for a 10% equity stake, now there's $10 million of monies. Well, first you got to pay back the 20 that happened to be there that you raised from it. Now you give an additional like 10% return on top of that 20 that happens to be there. So people are like, yeah, I got 10% equity in the deal to be able to be there. So you just throw in another 10 mil just for round number service. That's $30 million. The investors are happy because they're like, hey, man, I made this kind of return on my money. I got an additional $10 million on the money that I lent. So if the minimum buy-in was $1 million, right? There was 20 people that were involved. So those 20 people that were involved, my 1 million made me $500,000. I'm willing to take that bet consistently because it's about making money on money. Now, you on the other end, minus fees, expenses, things there. Now you have a $60 million pot to play with. And you have investors who you've already given your money back. So guess what you do? You go find the next property and the next thing and the next thing. And the math can math depending on if it's $100 million or if it's $1 million. The same principle applies. Use OPM so that you're just pretty much creating more leverage for yourself. And that's the whole journey. That's what all the big boys do. They're just like, hey, I'm not using my money into this. Maybe if I do, you'll see them say it, but they're not going to take all of their poker chips and push it all to the middle of the table, because that's not an intelligent investor. So when you think about these things, you got to ask yourself, am I going through life going through the traditional methods, or am I really open to playing the more sophisticated game? Because if you can look at it the same way as like if I'm going ahead and I want to build a business, this is another thing that I see primary example. If somebody has built a founder-led business and they bootstrapped and they built it from the ground up, guess what they value? I have zero debt on this property. I have gone ahead and built this on my thing, so I know I can go build it again. I'm here to tell you, it is much easier to push a car that's already going downhill and in motion than it is to get it started from zero. Because something that's already in motion, you already have the level to do it. Think about on an episode that I was talking about, like, hey, you can go through the process of if you buy 10 of these pest control companies, the valuation happens to grow. When you're playing with the house's money, there's other things you can be able to do. You don't have to go to the place of starting from ground zero and going and building things up and going through that. Because here's what I've talked to different founders that have gone through the process. Every single time you forget how difficult it was to start something all over again. You forget about the ways that it's going to, like, all the getting to the point of market validation. To some people, it's a sickness. Like, they love doing that thing. For most of us, I'm going to tell you, you probably don't want to do that time in and time and again. So it's easier to move something that's already in motion, because now you're at a place of, okay, I can change operations, I can change people. Now that when I'm playing with the house's money, like in the world of private equity, and I can use that different tiers of money, I now have a different opportunity. Because I chatted with a gentleman before, had gone through the process, building a business, been very successful, got to an exit, was tickled to death. Now has a little bit of what's called golden handcuffs. So they have a transitory period, about 2 years. And his idea was, I'm going to go start and do it all over again. Took me 8 years to do that. I bet you I can do now in 4. And my ask to him was like, do you really want to do that again? And secretly, he said, no. But I don't know another way. I said, I do. Why don't you just go buy what you need? I'll set up the funds, and then you can run much harder and faster and more efficient. And that's kind of the objective. So it doesn't matter what phase of the spectrum you're on. If you're on one spectrum where it's like, I'm trying to go ahead and buy my first flip property. Well, great. JV with somebody who has the experience of what you need. Find a way to get access to OPM, and then go acquire that asset, be able to do what you have to be able to do. Because in the wealth generation game, it's about long-term sustainability, not quick turn cash. Quick turn cash is great, but it's not sustainable. Because if you're always looking for the quick and the fast, you're going to train yourself to look for those things. And all you're going to do is find something as fast as it is to come out, as fast as it's able to go out. And remember, you're getting taxed at ordinary rates. So a lot of the things you're looking to do to offset really isn't there. Then you have people on the other side of the spectrum that are doing what's called LBOs, or leverage buyouts. They're setting up these funds. They ran multiple different syndications, yada, yada, yada. The goal through the entire process is to use OPM regardless of what you're doing. And that'll be one of the core tenets that you're going to be talking about. So with that being said, it's time for me to land the plane. Just know that right now, things may not seem like you know everything that happened in the process, everything that you need to do. That's good. That means there's opportunity for growth. That means there's opportunity for you to consistently keep evolving and get better as a business athlete. To figure out, okay, you shift left, got to shift right, be able to be there and go there. That's why we're wired differently. If it wasn't the case, then we'd be sitting there and stuck behind a desk, basically euthanized for the next 40 years. I ain't trying to subscribe to that. Neither should you. So, with the plane landed, OPM is the gateway of being able to accomplish your dreams in the most efficient and effective process possible. And I'll leave you with that. So, as always, you can find me on all social media platforms at Sylvania Harrod. Spelled Sylvania, spelled like Pennsylvania without the pen. Harrod, like the Harrods of London store. Appreciate you guys. Stay grateful. Cheers, everybody.
Thank you for tuning into this episode of the Contrarian Capitalist Podcast. If you found this episode helpful, please subscribe, rate, and leave us a review on your preferred podcast platform. Your feedback helps us reach more people ready to explore contrarian investment strategies. Stay connected with us on social media for more expert insights, behind-the-scenes content, and updates on upcoming episodes. You can find all the links in the show notes. Until next time, stay bold, think differently, and keep pursuing the legacy you deserve. Thanks for listening to the Contrarian Capitalist Podcast.